So in today's video, guys, I'm going to talk about inducement. Inducement, it's a really simple concept, but it's really handy to know if you're, especially, if you're trading liquidity style and supply and demand, stuff like that. So what I'm going to do, first of all, obviously, as always, in my educational videos, I'm just going to draw a little diagram, and then we'll go and look at some examples on the live markets. So first of all, inducement. All inducement is liquidity resting before a POI. So if I just draw a little diagram here, is for example, if we are on a downtrend and we've come down, we've then obviously come down here, we've come up, and then we've obviously gone down again, and then we've come up, tapped into our POI, and then you would see price run. So our POI would obviously be right here. So if we drag it over, as you can see, the liquidity is resting right before the point of interest. So what we are waiting for basically is for this inducement or liquidity, whatever you want to call it, to come up, get swept, and then for the trend to continue. So as you can see, I just mark it with this little tool here. All it is a dotted line with an X in the middle, and that for me represents where liquidity is, or inducement more specifically. And then obviously it can come in the form of, it can be one single eye in the middle, it can be equalized, but it can also be something a little bit like this. So again, if we come down, we come up, and then we come down again, I have a little retracement right here, and then come up, tap in, and then go. It can also be inducement right here, so it might look a bit like this, and then obviously our POI again would be right here. So these are kind of the models that you will be looking for when you're looking for inducement. It's a really simple concept, like I said, and all it is liquidity resting before a specific point of interest that you're looking for. So that's what inducement is basically. And if we just go down now and we will take a look at some live chart examples. So what I've done here is I've marked a few out for you right here. So if we just zoom into these examples here, as you can see, we have a supply zone. We have the supply, which it breaks down, and then we come up, we make relative equalize, and then price continues down. What we need to wait for then is for price to come back up, sweep this inducement here, tap into our POI, give us our entry, and then to continue down. As you can see here, we've had a change of character. We've created obviously this demand right here. We've come up, and then what we've done is we've come back down right here. We've actually not tapped into the point of interest here. If I zoom in a little bit more so you can see a little bit better. As you can see, we've not yet tapped into this POI. So for me, this would be ideal inducement, really close to the POI, and then what you're waiting for is obviously price to come up, come back down, give you your entry model, and then price to continue up. So it's a really simple concept, and we've got another one right here. So as you can see, it's nowhere near the middle. It's right over to the left hand side here, and all you're waiting for is price to come back down. So as you can see, we have obviously a little uptrend right here. We come up, we create this refined demand zone. We then come up again, we come down, we drop a little bit of inducement right here and right here. So you can obviously, what you could do is you could mark it like this, for example, just put it on a diagonal. So that could be your inducement, or you can, if you wanted to, just mark this one right here, and then obviously it comes up, comes back down, tapped in, and then away we go. And again, as you can see, we've come up, we've come down, we've created this refined demand zone, we've come up broken structure, and then we've come back down again. We haven't tapped in right here, so this inside bar, this would also be classed as inducement. This candle right here, so what you can do is just simply mark it like that if you want to do that. And then again, on the very next break of structure here, what you will get is obviously the demand zone is quite big. You could refine it down on a lower time frame, but that's for a later video. So as you can see here, what we see an expansive move to the upside. We come back down, we don't tap into the POI. What we then do is we come up, we break structure, and then we then return, sweeping our inducement, tapping into our POI, and then we continue. So obviously this is on a 15-minute time frame. If you wanted to, you could enter here on the 1 minute, or a lower time frame, and then you could target these 15-minute highs right here. So what you can do is target these 15-minute highs, and you know the risk to reward on this trade would be pretty big. And then as you can see, your inducement has been swept and you've continued to the upside. So yeah, inducement is a really simple concept, but you know, identifying inducement on your charts is really useful for, you know, added confluence to your trades. A lot of the time, well, what I look for is I look for some sort of inducement to be swept in order to, you know, enter a trade, and that's part of my trade plan. So what you need to do is you need to go ahead, practice on your charts, and see if you want to implement this into your own trade plan. If it makes sense to you, you can do that. For me, it's a really good concept, and you know, a lot of people that I know and a lot of people that trade smart money concepts also use inducement. You know, sometimes it might be worded in a little bit of a different way, but you know, overall it does, you know, mean the same thing. So yeah, if this video does help you out, guys, and you are going to check this out, please remember to drop a like on today's video, and I'll see you in the next one.